They say timing is everything in real estate. Well, what if I told you that Toronto, yes, the city once crowned as one of the world's hottest markets, has just slipped into a full-blown buyer's market? Right now, home sales are down 22% year over year, and yet prices are starting to stabilize. The question on every serious investor's mind, is this the perfect entry point, or the beginning of something much worse? Here's my take. As someone who's worked alongside top-tier investors in North America and beyond for over a decade, I can tell you, these moments of hesitation, that's where the biggest opportunities often hide. In this video, I'm breaking down Toronto's shifting market dynamics with fresh data, expert insights, and the kind of local intelligence most investors miss. By the end, you'll know whether to buy, rent, or wait, and how to position yourself before the window closes. And trust me, this window won't stay open for long. Toronto's housing market in 2025, a turning point or a trap? Let's dive into what's really happening in Toronto right now. Because if you're serious about making a move in this market, you need more than just surface-level headlines. We've all heard the classic line, location, location, location. But in 2025, it's more about timing, and data. And the data is telling an interesting story. The Greater Toronto Area saw home prices climb 4.2% month over month this February, landing the average at just over $1.08 million. That sounds like a rebound, right? But year over year, prices are still down by 2.2%. That's not just a stat, it's a signal. The frenzy is gone. Sellers aren't calling the shots anymore. Now check this out. Sales activity has dropped by 22% compared to last year, and the sales to new listings ratio is at 33%. Toronto SNLR trend 2024 to 2025. In real estate speak, that's a textbook buyer's market. If you've been priced out before, this could be your window. But here's where it gets tricky. The fundamentals are shifting. Affordability is still brutal. The median household income in Toronto sits at $97,000, yet the average home requires over $1 million. Even with a 20% down payment, you're looking at mortgage payments that chew up more than 60% of your income. Take a look at this breakdown. Housing affordability, income versus ownership costs, Toronto, 2024 to 2025. So, why are investors still buying? Why aren't they running for the exits? Because some are seeing what others aren't. Interest rates, a double-edged sword. The Bank of Canada has already made 6 rate cuts, bringing the 5-year fixed mortgage rate down to 3.87%. That's a game changer for monthly cash flow. Every $100,000 borrowed now costs about $520 a month. Lower rates make borrowing cheaper, but they also prop up prices longer than some might expect. I was speaking with a client from Sydney last month, an experienced investor who's been through 4 property cycles. His take? When rates drop this fast, you don't wait around. You move before the competition catches on. And he did. He locked in a pre-construction condo downtown for $730,000, $50,000 below asking. A year ago, that wouldn't have happened. But not everyone is playing that game. The condo conundrum, opportunity or risk. Let's talk condos, because they're the heart of Toronto's affordability debate right now. Prices have softened. The median condo price is around $688,000, and we're seeing some go as low as $450,000 in certain pockets. Take a look at this chart. Toronto condo. Prices peak 2021 versus 2025. But here's the catch. Pre-construction sales are sluggish. Developers are scaling back new projects because demand has dried up. And some experts are warning of a possible oversupply, especially if population growth slows further. One developer I spoke with last quarter was blunt. We're sitting on 200 unsold units we didn't expect to have. That's an opportunity if you're ready to negotiate hard, but it's also a red flag if you're counting on appreciation in the short term. Compare that to cities like Miami or London. In Miami, condo prices are still rising thanks to high net worth buyers fleeing tax-heavy states. London's prime real estate continues to see strong foreign investment, despite Brexit fears lingering. Toronto? We've got stricter lending rules and tighter immigration caps slowing things down. But, and it's a big but, Toronto isn't overbuilt in the way some headlines suggest. Yes, there are 32,000 plus units underway, but demand over the long haul will return. The question is whether you have the patience to wait. Renting, smart play, or missed opportunity? Now, for those thinking, maybe I'll just rent and wait this out, you're not alone. Rents in Toronto have fallen 8% over the past year. One-bedrooms are averaging $2,364. Two-bedrooms are around $3,084. And vacancy rates? They're finally climbing. After years of near-zero vacancy, CMHC is projecting rates to rise gradually through 2027. Take a look at this. Toronto vacancy rates projection, 2024-2027. From a renter's perspective, this is as good as it's been in years. More choice, less competition. Some landlords are even offering incentives. One client of mine recently got 2 months free rent on a high-end unit in Yorkville. 2 years ago, that same landlord had a wait list. But here's the twist. Long-term affordability isn't guaranteed. The city's rental housing supply plan is aggressive, aiming for 20,000 new purpose-built rentals by 2030. But whether those are affordable is another story. In cities like New York, high rents are the norm, but rent control laws offer some protection. In Sydney, rents have skyrocketed post-pandemic with little relief in sight. Toronto's somewhere in between. It's better for now. Supply and demand. The balancing act, let's talk supply. The City of Toronto has ambitious targets. 285,000 new homes by 2031, including 65,000 rent-controlled units. So far, about 23,000 of those have been approved. But will they be built? And who will buy them? Immigration is slowing. Caps are in place. RBC projects slower population growth in the coming years. Fewer people mean less pressure on demand, but it also means less rental income and slower appreciation. I was chatting with a London-based investor last week who's looking to diversify out of UK property. His question was simple. Does Toronto still offer better fundamentals than Melbourne or Vancouver? My answer? Long-term, yes. But in 2025, you need to be strategic. Buy quality. Avoid fringe developments. Focus on locations with proven resilience. The investor's dilemma: act now or wait. If you're sitting in New York, London, or Sydney wondering whether to pull the trigger in Toronto this year, here's my honest take. 2025 offers a rare alignment: lower rates, stabilizing prices, and a buyer's market dynamic. But it's not risk-free. If you're highly leveraged, waiting for further price drops could leave you behind. If you've got capital and a long-term view, the upside is still compelling. One investor I know, originally from Melbourne, picked up 2 units in Toronto's West End in January. His strategy? Hold for rental income now, ride appreciation later. He's targeting a 4% annual gain by 2027, which isn't headline-grabbing, but it's steady. And in a market that's shifted from FOMO to caution, steady might be exactly what wins. What to watch? Risks that could shift the market again. Now, before you make any move, you need to consider the downside risks. No market is without them, and Toronto's no exception. First, the affordability crisis isn't going away anytime soon. According to Oxford Economics, it could take another decade for prices to align with sustainable income levels. That's a long horizon, especially if you're banking on cash flow today. Second, there's the risk of rising vacancies in certain areas. We're already seeing more listings in the condo rental space. Some investors are struggling to fill units, particularly in developments farther from the downtown core. Take a look at this chart. Toronto rental vacancy rates by neighborhood, 2024-2025. And third, immigration caps could suppress demand more than expected. While Toronto has always been a magnet for new residents, the current policies are tightening that flow. Fewer people moving in can mean slower rent growth and potentially longer holding periods before you see substantial appreciation. I had a conversation with a New York-based fund manager last month who's paused all acquisitions in Canada until they see how immigration plays out over the next 12 months. Their strategy? Wait for clarity, then move fast when the time is right. But here's the thing. Most individual investors don't have the luxury of waiting forever. Sometimes the best deals come when uncertainty keeps the competition on the sidelines. Strategies for investors in 2025. So, how should you approach Toronto's market in 2025? Here are 3 clear strategies we're seeing successful investors use right now. Look for properties in established neighborhoods with proven rental demand. Places like downtown core, Yonge and Eglinton, or Liberty Village. Prices have softened, but long-term fundamentals remain strong. One of our clients from London recently picked up a unit in King West for 15% below peak pricing. It was leased within 2 weeks, generating solid cash flow from day one. Developers are offering incentives to move inventory, reduced deposits, free upgrades, even covering closing costs. But these deals won't last as soon as confidence returns to the market. Take a look at this data from the latest CMHC report. Toronto pre-construction sales volume, 2021-2025. Some investors are shifting toward multifamily or purpose-built rentals, which are seeing increased demand from tenants priced out of ownership. In fact, RE Max predicts steady rent growth in these segments through 2027. And remember, it's not just about Toronto. Comparing your strategy with other global markets is key. Sydney's rental yields are lower, London's stamp duties are higher, and Miami's market is heavily influenced by foreign buyers and tax incentives. Toronto still offers stability and transparency, which remain big advantages. What successful investors are doing differently? I want to share a quick story here. One of our clients, Emma, based in Sydney, was on the fence about entering Toronto's market this year. She'd seen prices fall back home and wasn't sure if the timing was right. But after running the numbers, she realized she could secure a downtown Toronto condo at $725,000 with rental demand strong enough to cover her costs from day one. Emma's key insight? She didn't focus on finding the cheapest property, she focused on finding the right value. She closed in February, and by March, her unit was rented to a tech professional relocating from London. She's now targeting 5% annual returns over the next 3 years, modest but steady. The takeaway: it's not always about timing the market. It's about time in the market, especially in cities like Toronto with strong long-term fundamentals. Wrapping it up. Is it too late to buy or rent in Toronto in 2025? Let's bring it all together. 1. Toronto's shifted into a rare buyer's market, giving investors negotiating power we haven't seen in years. 2. Interest rates are lower, but affordability challenges remain. 2. If you've got capital, this could be the time to lock in value before the market shifts again. 3. Condo prices have softened and rents are stabilizing. 3. But smart investors are focusing on prime locations and value plays. 4. Immigration caps and vacancy rates are risks, but they also create opportunities for those who move strategically. 5. Whether you choose to buy or rent, 2025 is shaping up to be a pivotal year for Toronto's real estate market. Now here's the bottom line. You can sit back and watch, or you can position yourself before the next wave of demand hits. If you've been waiting for a buyer's market in Toronto, this might be as close as you'll get. What should you do next? Ask yourself, what's your investment horizon? Are you looking for long-term appreciation, immediate cash flow, or both? Toronto isn't a market for short-term speculators anymore. But for investors who play the long game, the fundamentals remain solid. And I want to hear from you. Are you buying in Toronto this year? Renting and waiting it out? Or are you investing elsewhere? Drop your thoughts in the comments. I personally read and respond to everyone. And if you found this breakdown helpful, hit the like button so more investors like you can stay informed. Subscribe to EstateScope for deep dives like this every week. And turn on notifications, because in this market, timing isn't just everything. It's the difference between catching the next opportunity and missing it entirely. Final thought. The window of opportunity in Toronto won't stay open forever. The question is, are you ready to step through it?